All right. Thanks, everybody. All right. So let's do a little real time technical analysis lesson here. Because, anyone can write a book and be like, oh, back then I was right about this. I was, not wrong about that. One of the things I want you all to understand is that when we look at an indicator, in this case, we're going to look at this RSI momentum indicator, right? These things come with default settings. Now, where does the default setting come from? I don't know. Probably the person who invented the indicator, or I guess should say developed it. Now, here, the RSI indicator, right? The default setting is the red line is at 70. And if we get above that, the stock is considered to be overbought. Now, the astute eye would say, oh, well, I don't know about the astute eye, but the astute person would be like, oh, look at that. It got above 70 and it wasn't overbought. It wasn't overbought. It didn't get overbought until it got to the RSI here to 80. So for this particular stock, maybe you're better off using 80 as your setting for RSI. I mean, look at that. This is perfect. Gets to 80 right there, right before a sell off. Gets to 80 right there, right before sideways, and then a sell off. Got to 80 right there, like 2 or 3 weeks ago, was a sell off. Think about it, right? If a market is moving higher, I'm not saying this one is, but just in general, if a market is moving higher, you're going to have more false signals with one setting than another. So you just may need to adjust your settings a little bit. All right, so I'm going to just go back down there to 70. So you see what I mean, right? I mean, if you're trading a specific list of stocks or ETFs or whatever you trade and you have kind of a finite world to trade in, well, you should go through your whatever you're trading and kind of optimize it, figure out what setting works. I mean, it's clear to me when I look at McDonald's here that this thing doesn't get overbought until RSI gets up to about 80 or so. All right, let's do another random technical analysis lesson. I'm closing my eyes and I'm going to hit my keyboard and I come up with Citigroup, but we look at Citigroup all the time. Let's find something else we don't really look at. Celestica. Let's check that out. Let's see if we could find a technical analysis lesson here. Let's go to 1 year. All right, I see something. Now let's not look at momentum, but right here, we can see one of my favorite lessons, the importance of price levels. All right. Now look at this. This particular stock found support down here around 41 or so back here. Rallies. This is like April, sells off. Guess what happens? Oh, look at that. You don't need to be a chart guru to see that. It found support at the same price level. That was support back here. Rallies, comes back. Guess what? Found support at the same price level. Now, is this a random coincidence of the market gods that it found support at the same price level? Well, I suppose that, depends on how deeply you want to get into this stuff here. But from a practical point of view, it's just good to know that markets can find support at levels that were support before. It's because of seller's remorse. There's people who sold at the bottom, and when price goes higher, they're like, I'm an idiot. I made a mistake. If it gets back to my price, I'm going to buy my shares back. So this is a lesson right here. Supported former support levels. I can even see another technical analysis lesson. This is a different form of, well, I don't know if it's a different form, but it's a different manifestation of seller's remorse. People sell here, the price goes down. They're like, oh, I'm a genius. I'm the next Steve Cohen, but the price goes higher. And they're like, oh, if it gets back to my level, I'm going to buy my shares back. I made a mistake. So seller's remorse can turn what was resistance into support. Seller's remorse can make what was support stay intact. All right. So this is our random technical analysis lesson for this particular stock. Celestica. I don't even know what these guys do. Electronic technology. Here you can see another lesson. We get resistance at a level that was resistance before. This is also because of remorse. This is buyer's remorse. People bought here. The price goes down. They're like, I made a mistake. And if it ever goes back to my price, I'm going to get out at break even. So just like seller's remorse can keep support levels intact, buyer's remorse can keep resistance levels intact. Now over here, this is what we call a breakout. We got above the resistance. And a lot of times when that happens, it sets the stage for a big move higher. And that's exactly what happened. Well, if we get above the resistance, what does it tell us? It tells us that the investors and traders who created the resistance with their sellers are out of the way. They've left the market. So now the buyers come in and they got no one to buy from. It's like, oh man, I got to pay higher prices. All right. So here we have support can stay intact, resistance can stay intact, resistance can turn into support. Let's look at the 1-day chart here. And now this is another amazing thing too, right? When we look at a chart, we're looking at the psychology of the people that are doing the trading. Now, just like we saw, resistance can become support on a longer term chart. Here we have resistance becoming support on the 1-day chart. This is just today, which is October 29th. It's the same thing. There are people who sold back here who regret selling, and they say if the price gets back to my level, I'm going to buy my shares back. So on the longer term chart, we were looking at the psychology of people that have longer term time horizons. To me, this is like the most amazing thing that there is. But most people just don't get it unless they're like my students. What do we have here? Resistance at the level that was resistance before. All right. We're looking at the psychology of people that have a short term time horizon. Just like you can see resistance at levels that were resistance before in longer term charts, and you could see support at level that were resistance before on longer term charts, you could see the same thing on shorter term charts because now we're looking at the psychology of people that have shorter term time horizons. All right, I'm going to close my eyes, and I know you can't see me because I turned myself off because my office here is a mess, but I'm going to randomly, slowly touch the chart. All right, I came up with a letter N. All right. Now we've looked at NVIDIA a zillion times, but again, you can see the same thing here. Look at that. What was resistance became support. I mean, come on, man. Come on, man. You don't need to be like a super trading genius to see that. People overcomplicate this stuff, man. It's just about levels, trends, and momentum. That's what technical analysis is. All right, so I'm going to go back to N here, and let's go find something that we've never looked at before. Nanonuclear energy. I don't think I've ever looked at that. You can tell I've never. Oh, maybe I have. See, if there's lines on the chart, I've looked at it before. If there's no lines, I haven't looked at it before. So let's go to something down here. Noble Corporation. Oh, that sounds quite noble. All right, no lines on here, so I've never looked at this one before. Now let's just see what we can see. All right. I mean, here we go, right? And don't be like, Mark, I can't see what you're seeing. After you got some experience and you hang out with us for some time, you're going to be able to see this stuff. It'll be, it takes a while. It takes a little bit of time to get feel and confidence. But where did we find support? The same level that was support back here almost 2 years ago. And of course, some prices, some stocks are more, or I should say, less volatile. But you can always see these same things to some degree. Let's look. You know what? Let's look at the 5-year chart. Now we're looking at the psychology of the long-term buy and hold investors. Nothing really too profound there. All right, let's go back to the ends, and I'm going to go with, I don't know, how about NY? Let's see if that's something. Oh, New York Times. We don't want to. Oh, unless we're shorting it. Friggin' rag. Man, can you believe that MSNBC is comparing Trump to Hitler? I don't care if you like Trump. I don't care if you're a Democrat. I'm not. I'm an independent. I'm cynical. To compare anyone to Adolf Hitler, it's just a disgrace. This guy, Hitler is responsible for the deaths of 70 million people. And the fact that these idiots can make an equation just shows you that they're just not serious people. They've never read a history book. They've never thought. Anyway, I would never recommend to buy the New York Times, but I would recommend to short it because it's a piece of garbage. But what do we see here, right? What was resistance became support. Support in August of 19, March of 20. I mean, people should be really outraged by that, even if you hate Donald Trump. I mean, as far as I remember, I don't know. I don't remember Nazis, rounding up people and throwing them into death camps and concentration camps between 2016 and whenever 2020. Look at that. Support, support, resistance, support, right? If you know where these levels are. All right, let's move on from this uh, bad karma stock here. Novavax, Next Gen Energy. Just want to find something. Oh, NASDAQ. Let's take a look at the NASDAQ exchange. Interesting. A lot of trading must be good for this stock. Now, again, right, even though it's a completely different business model than what we looked at before, the psychology of the people that are doing the trading is the same. This is why we get support at the same level that was support before. This is why we get resistance at the same level that was resistance before. All right. You know what? I don't know. What should we do? Should we do 1-day chart here? This is how you're really going to learn. Stop by reading books because, anyone could be like, oh, back then I was so good. Look at this, right? Here's a today chart. What do we find there? Oh my goodness. Support at the same level that was support. Oh my goodness. Support at the same level that was resistance. All right. Let's pick a new letter. I don't know. I can't even see. I'm going to go with, I don't know, Q, E, W. Let's go with W. I mean, I know Wayfair. Ooh, TerraWolf. What is that? Wolf speed. Oh, look at that. My dog Clifford likes wolves. We're going to go to the 1-year chart. Now, you can tell I've never looked at this chart before because there are no lines on it. But what I can see is some of the same principles that we see on charts of pretty much everything. Support here, right, became resistance over here. Remember, people sold and the price goes higher and they're like, I made a mistake if it gets back to my price. Actually, I said that wrong. People buy here. This is buyer's remorse. There you got your buyer's remorse there. So people buy here, the price goes higher. They're like, I'm great, I'm brilliant. Finally, it goes lower. They're like, damn, if I can get out of this at break even, I'm going to. So when it gets back to their price and they can get out at break even, they do. All right, right down here. What do you got here? Support at the former support level. Let's just take a look at the 1-day chart. You guys have been watching the World Series. I don't really care who wins. I mean, I'm in the New York market. I was at least hoping for a little bit of excitement, but man, the Dodgers have just been kicking the Yankees' asses. All right, that's not too well defined. We're going to go do one more. So now I'm going to press the letter. What becomes before Z? X, Y, Z. All right, Y. Yellow pages. I don't know. I don't really want to look at the yellow pages. Let's look at, I don't know. Let's see if there's a Y, Y. Oh, look at that. Joy, joy. Happy, happy, joy, joy. Okay, so here we have the happy, happy, joy, joy stock. And once again, right? You got to understand, everyone. It's like the reason why we see these same patterns on charts of different things is not because we're looking at the same stocks in a way. We're looking at the psychology of the people that are doing the trading, right? And that's what technical analysis is or should be. I mean, look at this from January of 24 through July. You had really clear resistance up here. Here, what was support in December of 23 became resistance in September of 24, a year later, right? I mean, it's not, if you understand this and you're looking at it the right way, as in terms of like psychology, this should not be confusing at all. All right, I can't help myself. I got to do one more. Is there a triple Y? Nah, that's a little kind of. All right, let's do a triple Z. Is there a triple Z? Nah, that looks kind of weird. How about a ZZ? Like ZZ Top? Yeah, I still love ZZ Top. I mean, I still love ZZ Top. All right, let's find a American stock here. Zinc One Resources. All right, I don't know what the hell. Let's just check that out. Yeah, that's another one that's too low priced. All right, sorry everyone. I'm going to find one more here for you. We're going to go with X, which we know is U.S. Steel. Let's check out XP. All right, now I've looked at this one before. What can we see here? Well, I mean, one of the things I see is that resistance over here became support over here. This isn't very well defined. I mean, different stocks are different. Some the levels are very well defined. Oh, you know what? Let's check out Intel. I want to see stock that has like memory and well defined levels. I mean, look at this, right? This is what we call market memory. The same price level as important can be important for a long time. Right around here, around 43 and a half was important for Intel back in November 17, all the way up to February of 22. So almost 5 years. Resistance here, February of 20, April of 21. We go into this massive sell-off. I forget what they, what the news was. But anyway, we go into this massive sell-off, and guess what happens? Where do we find support? Well, the same price that had been support 8 years ago, actually even longer, 10 years ago. Market memory, everybody. I mean, it's an amazing thing, but you can't deny it if you look at the charts. All right. Thank you for tuning in for our real time, real good, real life technical analysis lesson. And yeah, I'll be doing these pretty much every day, and I'll see you soon.